What if I told you that a 250-year-old company suddenly woke up and decided to give 2,900% returns in just 5 years and triple its business in just 4 years? So this is the story of India's largest warship manufacturer, and since its IPO in October 2020, the stock has rallied from 107 rupees all the way to 2,686 rupees, and the revenue has shot up from 4,047 crores in FY 2021 to 11,432 crores in FY 2025, and the profits have quadrupled. It is a classic hockey stick growth story. But the real question is, can this 250-year-old giant continue to give us multi-bagger returns like it did in the past, or was that just a one-time wave which has already passed? So let me start by introducing myself. This is Sanika, your analyst from an MD at RangaOne Finance, and today we are going to uncover the real story behind a multi-bagger stock. We will dive deep into two secret engines driving its incredible growth and uncover one major risk that could sink this ship. So the multi-bagger stock is Mazagon Dock, and its story began in 1774, long before India's independence. For centuries, it was a quiet, steady shipbuilder for the British and then for the Indian government, building ships, repairing them. A reliable but not a remarkable business. For years, its revenue was flat, predictable, almost boring. But then the IPO happened and everything changed. It was like a dam breaking. So what was the trigger? See, the answer lies in something which most of the people miss: patience and timing. Before its IPO, Mazagon was working on huge multi-year defense contracts like Project 75 for submarines and Project 15B for destroyers. Now these projects take 6 to 8 years to complete. So the revenue is not booked all at once. It is recognized at milestones. And right after the IPO, many of these massive projects hit their most important milestone. So the money which was locked up in construction finally started hitting the company's books. But that is only half the story. While all of these projects were maturing, Mazagon Dock was quietly upgrading its capacity. Now, building a warship is one of the most complex engineering feats on this planet. It is not like assembling a car. It is like building a floating city with weapons. And before its IPO, Mazagon Dock had invested over 300 crore rupees on modernizing its shipyard. Think of it like upgrading from hand tools to a state-of-the-art robotic assembly line. And the results were stunning. So the task that used to take 6 to 8 months, like aligning a submarine shaft, now just takes 2 months. And their capacity to build submarines simultaneously nearly doubled from 6 to 11. And now they can also build 10 warships concurrently. So this is not just about being faster. It is about being more efficient, which means more profitability. So the profit margin of the company jumped from 6% in 2021 to 18% in 2025. And the company's ROCE also jumped from 26% in FY 2021 to 43% in FY 2025. So now they are building more, faster, and earning more on every rupee invested. So this combination of maturing projects and supercharged efficiency creates the perfect environment for revenue growth. But with great growth comes great risk. And Mazagon Dock's biggest strength is also its greatest weakness. So who is their primary client? The Indian Navy and the Ministry of Defense. A whopping 95% of their revenue comes from government defense contracts. So this is what we call a client concentration risk. It is like having a single, very powerful boss. If that boss is happy, your business is great. But if their priorities change or if the budget gets cut, then your entire business is at a risk. But the risk goes even deeper. It is a cost trap. So that is exactly why we analyze these companies at RangaOne Premium. So you do not have to walk through this maze alone. You do not have to study the contract structures or dig through 300 pages of annual reports. We do all of the hard work, giving you the exact entry point, exit point, target, add more levels, etc. All you get is the final, clean, high conviction conclusion, whether it is worth investing, how much to allocate, and what to expect. It makes your decision making simpler, safer, and far more confident. So, if that is the kind of experience you are looking for, then you will feel right at home inside the RangaOne Premium community. For more details, you can check out the link in the description. Now, coming back to the price trap, most of the defense contracts are fixed price. Now, Masgaon quotes a price, say 1,000 crore rupees, and that is it. The price is locked. But these projects take 5 to 10 years to get completed, and in that time, what happens to the price of the steel, the labor, and the imported components? The prices go up. But Masgaon Dock cannot pass those extra costs to the client. They have to absorb them. And this is the reason you can see that on a quarter-on-quarter basis, the profits are not stable. We can see a sudden dip in the OPM percentage from 26%, it is directly down to 3%, and then up to 11% and jump again to 24%. So this is the major risk in this business. Once a project is signed years in advance, any rise in the cost directly hits their margins. It is like agreeing to sell a house in 5 years at today's price. If the market booms, then you lose out. So how exactly is Masgaon Dock trying to break free from these golden handcuffs? See, the company knows it cannot rely on one client forever. So it is making two big moves. First is diversification. A 6,400 crore capex plan and a commitment of 5.06% PAT investment in R&D. The company is gearing up to build commercial ship cargo vessels, tankers, and increasing its exports. It is a logical step, but it is like a Formula One team deciding to build trucks. It requires new skills, different kind of muscles, specifically a higher deadweight tonnage capacity, where currently it lags behind competitors like Cochin Shipyard. Now, second is ship repair, and that is a smarter, more stable business. It is less glamorous than building new ships, but it provides the company with a recurring revenue without needing massive new investments. And to top it all, Masgaon Dock has been awarded the Navratna status, and that is a game changer. It allows the company the freedom to invest up to 1,000 crore rupees in any project without waiting for the government approval, allowing it to be faster and more agile. So what is the final verdict on Masgaon Dock? For that, let us talk about it from an investment perspective, because that is where things get real. See, Masgaon Dock is not the kind of stock which will keep on climbing every month. It is the kind of company which can stay flat or even sideways for 2 to 3 years and then suddenly shoot up very hard. And that is just how the business model works. Long projects, milestone payments, and uneven cash flows. So if you are looking for quick returns in the next 1 or 2 years, then this stock might not be the right pick for you. Yes, it is trading at a 30% discount from its peak, but that does not automatically make it a buy. The PE ratio this stock is currently trading on is 46. So historically, at such elevated valuations, Masgaon Dock has struggled to maintain its momentum and has corrected sharply. And in their recent earnings call, their CFO himself has said that maintaining a 20% growth is a challenge, and he is expecting the growth to be in the range of 10%. So slower growth can easily push the stock into a long consolidation phase. Now the whole point of this video is not to hype up Masgaon Dock. Yes, it is a great company. Yes, it has made incredible returns for its investors in the past. In fact, I have also made money on it as well. But past performance does not guarantee future returns. Don't just look at what the stock did yesterday. Look at what the company will do tomorrow. Understand the risk they are carrying and only then make an informed decision. Because if you can see the future path of a company clearly, only then you can predict where the stock price will go. So let me know your thoughts about Mazagon Dock in the comments below. And if you found this analysis helpful, then subscribe to RangaOne Finance. And as always, this was Sanika from RangaOne Finance, and I will see you very soon in the next one. Till then, bye-bye.